So the question is, what is going to happen in the 2023 housing market? Everybody wants to know, right? So let's take a quick look at what happened last year. Last year was the first year that interest rates doubled within the calendar year. In January, we were at 3.2% interest rate, and we ended, well, the most recent data was from early December, and we were at 6.3. So obviously, that is tied to inflation, and as inflation went up, interest rates went up. Inflation has started to calm down, and we've seen rates come down in the recent weeks. We hit a peak in November of just over 7%, and now we're in the low sixes. Here is what the experts are predicting for this year. We're looking at anywhere from a 5.2, which is MBA. The Mortgage Brokers Association is predicting that for the end of fourth quarter. And you can see rates as high as 7% Fannie Mae is predicting for this first quarter. The averages are looking at about 6.5% first quarter. They dropped to 6.3, 6.2, and ending the year at around 6%. But of course, all of this is projections and is tied to the 10-year Treasury and what inflation does. So we all hear the news about how the housing market has tanked. Sales are down, which they are. So as of right now, the final numbers are not out and won't be out for another week or so. But the total sales was about 5.8 million is what they're forecasting for 22. If we look at last year, we were over 6.8 million. So obviously a drop of 1 million home sales in a year's time is huge, which is why it felt the way it did, because it was such a drastic drop. But now if you look back, right, during the housing crash of 06, 07, 08, we were at 46. We dropped, we were at about 4.6 million home sales, 4.5 all throughout that time. Now, if we go back before, house sales of 5.8 is a little bit lower than we're used to, but it's not that much lower than the pre-pandemic numbers. So now what does that mean for here in Orange County? Well, in Orange County, we know that the numbers are always different. And if you look back, obviously, so the beginning of January, we had 3,600 sales and we're down to 2,700 in December. Now we go back to previous. So let's look at the peak, which was June of 21, and we had over 7,000 sales. So that drop is drastic for us in Orange County. But now if we go back further to January of 19, we were at 2,900 sales. We're now at 2,700 sales. So if you look back pre-pandemic, the numbers are not that much different than they were prior to this crazy housing market that we're just coming out of. This bar graph will show you a little bit easier to see. We were at just over 6,100 sales in 2020, down to 49 or almost 5,000, and now we're at 27 the end of 22. The experts are predicting that we're going to continue to see a decrease in sales this coming year. But what does that mean for pricing, right? They are predicting that we're still going to see the averages as just a slight increase in home prices. What does that mean for us here in Orange County? We're typically double the rate of appreciation that the nation sees. So if as long as this nation number is positive, we'll be okay. Ivy Zelman is saying is the most, I guess, negative, however you want to call it, but is predicting a 5.1 decrease, where you have Realtor.com who's predicting a 5.4 increase, right? So if you look at somewhere in the middle, we're looking at MBA, which is about a 0.7 increase. So again, the news is saying the housing market is crashing, the housing market is crashing. The reality of it is we were used to seeing record amount of sales, record amount of appreciation, where that's not going to be the case the next coming years. But here in Orange County, we're not going to see this drop in prices like some of the other areas. I think Texas has been hit hard, parts of Vegas. So certain areas have been hit harder than others. I don't predict that we're going to see that here in Orange County. If you have any other questions, please feel free to reach out to us. Thanks so much.